Good afternoon. Welcome today. I have a guest with me. It's Sandra Mogelefsky from the Lynx Mortgage Bank. Today we're going to talk about how to get started for a new home buyer. So welcome to our show today, Sandy. How are you?
Thank you, Michael.
That's great.
Very well, thank you. How are you?
Great, great. So I often get a home buyer ready to start shopping right out of the gate. And the first thing they want to do is start showing houses. We start looking at houses, and I have to stop them. And I have to say, hey, how much are you pre-approved for? How much can you get a mortgage for? And they stop and they have no idea. So that's when I recommend they call you to get pre-approved. So when a new home buyer is calling you to get pre-approved, what are you looking for? What is that process like? What can they expect?
Well, basically, I usually have a general conversation with them about what they do for a living, how long they're doing it, what is their income, do they know how their credit is. But for the actual pre-approval, we have them send us 2 years W-2s.
2 years of W-2s?
2 years.
Wow.
W-2s, or if you're self-employed, your business and or personal bank statements.
For 2 years?
Yes.
Okay.
In some scenarios, you need full tax returns
Yeah.
for 2 years. You need a month worth of pay stubs. And then we ask for any or all asset accounts so that we can determine whether you have reserves and what is usable versus non-usable. And then we ask you what you're willing to use towards the down payment and closing costs. And we send you a credit authorization. And that'll allow us to run your credit, take a look at what your scores are.
Right.
And it'll also tell us what your minimum monthly debts are.
Great.
As well.
So now I have more questions for you based on everything you just said to me.
I opened up a can of worms.
Yeah. So listen, credit scores. Some people have great credit scores. Some people have average credit scores, and some people have not so great credit scores.
This is true.
How does that affect them at the mortgage loan? Is it about the rate? Does the rate change based on their credit, or?
Well, basically, obviously, the way they work it, and it's just a numeric system, but the better your credit, the lower your rate will be.
Yeah.
So it really depends on what range you're in, whether you're excellent, fair, good, poor. And if you're below a certain level, then sometimes you can't get credit.
Okay. What is that
But we do
threshold?
help you
What is the
find-
low number on the credit?
Some banks require a 620 credit score.
Okay.
Some banks will do it as low as a 580
Okay.
on an FHA loan. It really depends on the lender themselves.
Ideally, we'd like to see people in the 700s.
Correct.
Okay.
If possible.
Yeah, and I'm sure you have some advice on how people maybe can build their credit and repair it
Absolutely.
before they even apply for the loan. Maybe there's some homework they can do to prepare and get in a better position,
Yes,
right?
in a lot of situations, we are able to look at the credit report and determine if there are any immediate ways or quick ways that you could actually improve your credit score.
Sure. Maybe pay off a couple of credit cards
Right.
at a small thing
Certain
like that.
things take time, and there's nothing
Yeah.
you can really do about it, but
Yeah.
certain things are a lot easier to do right away in time for you to buy the home.
I've certainly had those clients that have poor credit scores, and they're working on repair before they can get that in order to position themselves. So you brought up something else. We talked about debt to income ratio, or otherwise we call it DTI, right?
Yes, correct,
So
we do.
explain to our buyers what debt to income ratio we're looking for and how that works.
So, the normal back-end debt-to-income ratio is around 41, is that midpoint.
And when you say 41, you're saying the debt to income should be 41% or lower.
Correct.
Okay.
And that's a cumulative back-end ratio. So the front end's usually in the 30s. The back ends could be anywhere from 41 to sometimes as high as 54, 55, depending on the program that you're in. So when we look at the credit authorization, that helps us determine how much you have left over to put your payment within the range of the correct debt-to-income ratio
Okay.
to meet the requirements of the program.
I get that. So now, how do you calculate the debt to income ratio? I mean, we have first-time home buyers that never heard this stuff before.
We look at your minimum monthly debts and then what your mortgage payment would be, and then we add it together and divide that by your income.
So
it's really a direct comparison of your cumulative debt to your income.
Yeah, so when you say income, if I made 100 grand last year,
Right.
if I divide that by 12, that's my monthly income, correct?
Correct. We go off your gross.
Gross,
not your
off the
net.
gross.
Yes.
And then the other thing we want to look at is what are my monthly payments for credit cards, car payments, rent, or whatever else is accumulating, student loans.
Exactly.
And when we divide that by the income, we come up with that ideal number of 40, 41, 45%, right? That's what we're trying to get
Correct.
to?
But we need to, the back end ratio will incorporate your mortgage payment as well.
Sure. And that's how you come up with this is how much the bank's willing to loan you and what your payment could be each month.
Right.
Okay, great. And then the last part of that is when you write a pre-approval letter, you're also putting in there what the suggested taxes might be, right? Because that
Correct.
affects the monthly payment?
Yes, it does. So, if you have 12,000 in taxes at 1,000 a month versus 24,000 in taxes, that's gonna change your mortgage payment. So we usually put that you're qualified for this loan amount with a taxes of
An
approximately
assumption of taxes.
Right.
Right.
This amount.
Right.
Because if the taxes are higher than that, then your loan amount could be lower.
Right.
Will be lower.
So I might have somebody who's pre-approved for $500,000 mortgage, and it might suggest or assume that the taxes are $12,000.
Correct.
If I should take them to a property that's $450,000, but the taxes are $14,000, that might still work, but we have to run that by you. And conversely,
Yes.
they might look at a $500,000 property where the taxes are $9,000, and maybe they have a little bit more spending power, correct?
Correct.
Okay.
Absolutely.
So
that's
that's-
exactly how it works.
So it's really important then for the buyer to stay in touch with you very regularly to tell you what they're looking at, what they're thinking, what they want to make a deal on, so you could validate before we get to that point of contract, right?
Yes.
Okay.
I always tell my borrowers to please double check with me before you put an offer in, or have your realtor check with me.
And Sandy, how available are you by phone? Is it Monday to Friday, 9 to 5?
Oh, God, no. I would never do any business. People work, so no, you can call me anytime. Usually I'm free till 10, 11 o'clock, and weekends are the same as weekdays for me.
You'll
so.
pick up that phone for a client anytime to help them out.
Exactly.
I know, that's great.
Sandra Mogelefsky, licensed mortgage loan originator, MLO number 338049. Links Mortgage Bank, LLC, licensed mortgage banker, New York State Department of Financial Services, NMLS number 5838, located at 143 Post Avenue, Westbury, New York, 11590, equal housing lender.